All right, folks, this recent dump is just a blip. And yes, I think alt season is still underway, and we have more news suggesting that crypto is definitely expanding, and institutions are not going to give up on crypto just because of high interest rates. And if institutions aren't giving up, then we're overall not going to go down. Now, first, why did we go down? Because the producer price index numbers, which the Fed tends to look at more than the consumer price index for determining if inflation is going up or not, came in really bad. Whereas the CPI, the consumer price index, came in at 2.7, a little bit below the 2.8 expectations. The producer price index, the PPI, came in at 0.9 and plus 0.9, and the projection was like plus 0.2. So they came in 0.7, and that's in 1 month. The overall PPI is like plus 3.3 or something on the year, which is the highest we've had in quite a while. And also, this is the biggest 1 month increase we've had since basically mid 2022. Was it caused by the tariffs? Yes, it's most likely caused by the tariffs, especially in industries like steel and other industries like coffee that are severely hampered by the tariffs. The stuff that we tend to import a lot, they are actually pulling in. It looks like the dip in the price of gas of negative 2.2 wasn't actually as big to the price of producers as the price of consumers. It also does show that some of these companies are actually eating a decent amount of the costs, but most likely that's short term. And if prices actually continue increasing, they're not going to be able to mount the cost because the margin in such industries is just not that big. So that's why economists over the last half of the year do actually think that the increase in producer price index is going to affect the consumer price index in a few months. Now, that usually is true. If the producer price index goes up, the consumer price index does usually follow within a few months. So that's actually not like a lie. That's a real thing. So I do expect inflation to go up. But why am I still bullish? Well, because we only really have to hold out for 1 or 2 more months. And I do think the companies may be able to do that, hoping for some kind of resolution from the White House. Now, eventually, as the producer price goes up, it's going to flow to consumer prices. We're already seeing some of that. But right now, some of the producers are definitely still holding back, eating the costs. But their bank account's going to get pretty thin soon, and they're going to have to pass it on. But that doesn't really matter because the next FOMC is essentially in September. And I think if the numbers for the next FOMC hold, that means the consumer price index doesn't actually go up and the producer price index isn't too bad, the Fed will actually cut rates. I do think there's a lot of pressure on the Fed to actually cut rates at this point. More and more of the Fed's voters, the board of voters, are more turning to cutting rates, especially like, the people that Trump is nominating to replace Powell. And also like another one of the board members stepped down, so he's nominating someone else to replace. So there'll be more and more votes, even with Jerome Powell, to actually cut rates. Now, I think most of the board is still going to follow Jerome Powell. And looking at the producer price index, he was actually right. The inflation is going to be seriously affected by the tariffs. I mean, a 0.9 increase in 1 month is actually pretty huge. Like I said, the biggest increase since mid 2022, when we were actually still reeling from the massive printing that happened in the years before. But now there's no massive printing. There hasn't been for several years. And of course, if you raise tariffs and increase prices on producers, that might come down to consumers as well. So the report today was the main reason. But since I only believe you have to hold out for one more CPI before we get some rate cuts, and that will have some nitro to boost the economy, even though if the inflation will go up like towards the end of this year, at least we'll get 1, if not 2 rate cuts, because we do have a FOMC in September and another FOMC at the end of October. So the best case scenario, I think, is if we hold off the inflation until November, then we get like both the September and October rate cuts, plus the ETFs that come in November, and that's going to supercharge the altcoins. And I think that actually has a pretty high chance of happening. If you look at poly markets, the chance of a rate cut only fell from about 80% to about 75%. So most people still think that we're going to get the rate cut, and I genuinely believe that we are still going to get the rate cut. And as long as we get a rate cut of any sort, I do believe the market is going to follow suit. And that's why you didn't really see stocks dip today, because the rate cut analysis, prognosis from most of the experts has not changed. And people are so obsessed with a 25 basis point rate cut that as long as that's there, it doesn't really even matter what other news happens. I think the markets are going to keep sailing. Markets right now are definitely looking more for like just any kind of bullish situation than a bearish kind of situation. But the other thing is, you can see that big companies are gearing up for crypto expansion. And obviously that's very, very good news, because that means like regardless of the interest rates, they're coming into crypto. So Charles Schwab, Fidelity among traditional companies hiring for crypto expansion. That means they're going to offer more crypto services. They're going to offer more crypto funds as well. And that's very, very important for the overall crypto industry. They're hiring a lot of crypto talent. That means like you get a lot more people going to these traditional firms, getting suggested crypto products. So there's going to be overall a lot more investment in crypto. A lot of people that are not familiar with crypto, maybe not so trusting of crypto, I think like when they see their like favorite financial company offer crypto products, and if it's just Bitcoin products, I do actually think their opinion is slowly going to change. So this is like really big news. We're seeing more hires for crypto talent from these big financial companies, not just like in the crypto industry, but in the traditional finance industry. So Charles Schwab, Fidelity, and other traditional companies based in the United States are hiring for senior crypto positions to seemingly make a push into the industry. The open positions come as regulatory clarity has increased, paving the way for TradeFi to enter space. And they know there's trillions of dollars into this, so they're going to push into this. And they see like, a good section of the financial investors are actually interested in crypto. And if they get on board, then I think they can definitely onboard the rest of the public. The open positions indicate a solid push into the crypto space. Charles Schwab, for instance, is hiring for a senior product manager in crypto trading and a senior product manager in crypto on-chain experiences. As Cointelegraph has reported, the $10 trillion asset manager plans to launch Bitcoin and other spot trading, with BTC trading services available by April 2026. So the thing is, like, if people are believing that there's going to be a bull run in April, May 2026, I don't blame them, because that's when Trump's Fed guy comes in. We could actually get that one whole percentage point interest rate cut then, coupled with like a lot of services becoming available in 2026. I mean, that's definitely good news for crypto. You see like, crypto jobs, some of the hirings, senior product manager, crypto trading, senior product manager, crypto on-chain experiences, IT product manager. Now, these probably pay a lot. So if you're actually interested in a good paying job and you have the skills, maybe apply for those. So Fidelity, which has 6.4 trillion in assets, which is below like BlackRock's 10 trillion, but there's number 2, is hiring for a crypto technology risk analyst. Technology company Booz Allen Hamilton is seeking a crypto subject matter expert, and Standard & Poor's Global S&P is hiring a senior analyst for crypto research and development in crypto and decentralized finance. The hiring surge comes as the Trump administration pushes for better regulatory clarity surrounding digital assets. On July 18th, U.S. President Donald Trump signed the Genius Act into law, which regulates stablecoins and their issuers. The clarity surrounding stablecoins has led traditional finance institutions like JP Morgan Chase and BOA to explore financial products tied to digital assets. The U.S. Senate is expected to consider a market structure bill when it returns from recess in September. The bill is expected to deliver further regulatory clarity and support crypto integration with traditional players. So these are all very, very bullish moves for the crypto market, and I definitely think crypto is going to ride a bullish wave. So yeah, there are big institutions hiring for crypto expansion if you're interested in a job, but that also shows that they're going to offer more clients crypto products, and that could mean billions of dollars coming into crypto. Open interest on Bitcoin is still very, very high. That actually hasn't reduced. You won't see it on TradingView, mostly because open interest is kind of like futures volume. Well, you won't see it on the spot volume in TradingView. Spot volume is still pretty low, but I'm expecting that to actually pick up as time goes on, as we head into Q4. So everything is really aligning right. And if you really look at the stock market today, it didn't really go down. I mean, the U.S. stocks, the Dow was only down by 11 points. That's negligible. S&P is actually up by 1.96. NASDAQ's down by 2.47, also negligible. So there was negligible movement. Like when I first signed on, they were down by 200-300 points. But then people were like, oh, you know what? The probability of us getting a rate cut is still like 75%. And then like the scariness kind of went away. And because the scare kind of went away, stocks actually didn't do all that bad. Oil is like slightly up today, but that's a key factor. It hasn't really changed all that much, honestly. Oil honestly has not changed all that much. It's still lower 60s right now, and I think that bodes well for keeping inflation low for 1 or 2 more months, which is honestly all we need in the crypto market. Because realistically, as long as we get that blow off top, it could crash afterwards for all I care. As long as I get to cash out, I think where most of us will actually be fine. And we know there's bound to be a pretty big dip. I actually think the bear market will be kind of legendary at the beginning as well, because you're going to have like this massive rate cut that might spur a lot of buying, get us pumped up in like April or May. And then, inflation kicks right back in, like the dominoes start falling, and then like the market bottom just drops out, especially for altcoins. Now, Bitcoin, they might be able to hold it up unless someone's really trying to liquidate Michael Saylor, which I don't think they'll actually try to do because it's very difficult to do. But I think the bottom for altcoins is going to drop out. Even though they have the ETFs, I don't think like when that sell-off commences, I don't think too many people are going to be buying those ETFs, and many people are able to take shorts. Remember, when an ETF comes out, not only can you buy it and long it, you can also short it, and obviously the bears are going to be taking that short. I can almost promise you that's going to happen. So we can get an epic bear market where prices will be rock bottom afterwards, and you can buy the prices at rock bottom about a year after, maybe 8 months after, the market tops. And that top, I do believe, will be between 150 and 180. You might get a situation where Bitcoin only goes down to like 75 or so, but some of these alts lose like 90 to 95% of their value. And when that happens, it's time to pick some of those alts up. Or you can just wait 2 more years and wait for the next cycle if you believe in the next cycle. Or whoever picks up the economic mess after this next bout of inflation happens, because of the aggressive interest rate cuts that Trump wants and that he's actually going to get, because his guy is going to be ahead of the Fed. I think like combined between the tariffs and the lower interest rates, I think a lot of stuff is going to go sky high. So you better get some money in your pocket during this bull run, or you are going to be hurting. I think we will get like, kind of like a flashback to like 5-6% inflation rate. And then like even his guy might have to be conservative. And like, because Trump wants liquidity injection, they might really start tightening really, really late, or they might just delay or not tighten at all when inflation goes up. And that will kind of send the economy into a spiral. So I can see like very good times in about 8-9 months, but then like when you get to end of next year, I can see very, very bad times as well, based on how the economics is actually going, because I don't think he's going to let off on these tariffs, and then he's going to cut interest rates. Those two things I do think will make an already high inflation start soaring. And yes, based on historical data, PPI generally does lead into CPI, although we'll have to see like how much these companies are willing to absorb the cost for the customers and how long they're going to do that, because companies are not going to be willing to eat into their profit margins forever. Obviously, their investors will be really upset, and companies are obviously completely beholden to their investors if you don't really know how that industry works. But as for right now, all these big companies are actually hiring for crypto positions. I think they're massively expanding their crypto offerings, and that, along with the declining interest rates, at least for the first couple of months, will actually suck in billions of dollars. And also, like, if there is a lot of inflation, some people might buy Bitcoin as a hedge, because I don't know if cryptos directly, like crypto can't really, well, a lot of cryptos can't really inflate, including Bitcoin. They have a maximum supply. I mean, there's inflation like every year, but they have a maximum supply that they actually can't go past. So I think more and more people will be attracted by that if inflation soars higher again. So crypto might be out there with gold and gaining even in a inflationary market. I'm hoping that's what happens and the bear market won't be too bad, but even if that happens, it could just be Bitcoin outshining everything else. So maybe you want to sell into Bitcoin towards the top of the bull market. Maybe you just want to cash out. I'm not really sure. I'm pretty sure you don't want to stay in crap coins at the top of the market, which I do believe will happen sometime between like October and April of next year, depending on how things play out. We might get 2 humps, one in October, November, December, and one in March, April of next year, or May of next year. I think to mid next year, unless something really collapses, I think the market should be pretty good. But after mid next year, it could all collapse, especially if inflation really starts rising because of the junction of the policies of massive rate cuts and because tariff effects. Now, tariff effects should actually be like one-off effects, but Trump, he just imposes random tariffs whenever, and that's really, really unpredictable. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.